Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. Got a big day coming up tomorrow, guys. FOMC is going to be reported. And the last time we had FOMC, it was a legendary move intraday. You guys remember back on December 18th when we broke down that 602 level and smashed the bulls that day when SPY just dropped from a high of 606.4 all the way down to 585-ish. That was an incredible day that day. Sure enough, we are literally in the same area. As far as price goes, we are literally in the same area or around the same area we were at the last FOMC. But what is the context? Well, after a very, very beautiful gap down that we had last Friday, the bulls decided to take it as an opportunity to buy the dip. And they managed to push the market up from a low of 594.6 to today going to a high of 605.37. Coming up just shy of testing this red line right here. That is my 5 daily moving average. My 5 daily moving average. Now this moving average, at least to me, is very, very important. Okay. When the SPY tends to be in a strong uptrend, the price of the SPY tends to stay above the 5 daily moving average. When it is chopping, it'll flip back and forth constantly, getting above it, getting below it. And when it's bearish, it spends a lot of time below the 5 daily moving average. We recently had that gap down at last Friday as mentioned, and now we back testing this 5 daily moving average as a resistant. The market's trying to change its role to be a resistant level. For me, it's a very powerful moving average, and when the SPY is above it, I tend to lean bullish. But when the SPY is below it, I tend to lean bearish. However, today, it's not as simple. You see, we have FOMC tomorrow releasing at 2 p.m. Eastern time, and then Jay Powell will be speaking 30 minutes after that, around 2:30 p.m. Eastern time. During FOMC is not the time to mess around and find out, because as you guys see in the last one, if you are on the wrong side of the market, you will and can get crushed. So today's video, it is my job to try to prepare us, not to give you guys predictions, but prepare us with a plan of reaction depending on what happens tomorrow. Okay, and the big thing I want to talk to you guys about is that 5 daily moving average. Because if FOMC gets released tomorrow and we are bullish, 2 things that I need to see. Number 1, SPY staying above the 602 level. If you see SPY above the 602 level and then it clears the 5 daily moving average, which is around 605.5-ish, that is a very bullish sign, with 607, 609 and new all-time highs. Probably above 611 or higher would be in play if SPY recaptures that 5 daily moving average. A lot of times in the past, a recapture of the 5 daily moving average is very bullish. Not all the time, but more often than not. And you know, we can't predict the future. We can't tell the future. We can make some educated guesses, of course. But for me, when I'm trading, I want to trade based on probabilities with the odds in my favor. And more often than not, a recapture of the 5 daily moving average tends to be very bullish with those levels that I mentioned above. Above 605.5, 607, 609, 611 or higher would be in play. Get bullish if SPY gets back above the 5 daily moving average. All right? That's the bull case scenario. The bear case scenario is this. I mentioned that we are retesting the 5 daily moving average. And SPY tends to be bearish when we are below it. For me to trust the rejection from here, when FOMC releases tomorrow, just like the last FOMC, I want to see support levels fail. 604, 602, and 600. Okay? Now we recaptured that level today, that 602 level. We need to see a false breakout setup. Okay, you go to the 15-minute chart. Let me show you guys an example of false breakouts and false breakdown setup. See, a false breakout, here's an example of a false breakout. Right here this morning, the first setup that SPY had was a breakdown of my 600 level. This was alerted in the group. A breakdown of 600 led to a $3 drop to the downside, almost a $3 drop to the downside. But this is when it was cleared. They cleared it in the pre-market and aftermarket. It wasn't official during the trading hours. But the idea is the same, where the market pushes price above a certain level and then it breaks back down that level, and you want to play it level to the downside. And then it had that violent bounce back to the upside. Let me show you an example of a false breakdown. Now, a false breakdown is like the false breakout, except in reverse. You guys see it right here. We broke down 600. We hit support. And then what happened? We recaptured 600. That false breakdown was alerted in the group. This was the first one. This is the second post of the day when I mentioned the breakdown. And then the third post of the day is when I mentioned the 600 level being recaptured. Recaptured, and boom, it just kept pushing the SPY up higher to the upsides. Ooh, all these arrows just popped out. Right there. A false breakout is a trigger to go short, and a false breakdown, which is this level right here being recaptured, that example is a trigger for calls. Does that make sense? So when we are trading tomorrow for FOMC and we see support levels fail, you want to look to short. If we break out that resistance level of 605.5 and get above the 5 daily moving average, you want to go look to long. Okay? All I'm doing is identifying the levels and the setups, and it's on us to trade it unbiasedly in real time, whether it's to the upside or to the downside. If we get back above the 5 daily moving average, we are bullish. The RSI is not overbought, so it does have some energy to pop back to all-time highs. And if we break down 604 and 602 and 600, at least on the 15-minute chart or higher, then you want to go short. Okay, guys, does that make sense? I give you guys the bull case. I give you guys the bear case. I really hope that makes sense. And with FOMC tomorrow, I know lately it's been pretty trappy, but with FOMC tomorrow, I believe we're going to get a real move. Look at what happened in December 18. It's going to be a big move. Hopefully, it's going to be big money, lots of money to be made. And I hope and pray we are on the right side of the market. Now, what is Uncle Charter's advice on how to be on the right side of the market? Well, I tell you this, trade with the traps. Use the false breakout and the false breakdown setup as your best friend, as your go-to setup. Okay? If it's a false breakout, you want to see a recapture or a breakout of a level, and then you want to see it break down just like this candle right here. If it's a false breakdown, you want to see a breakdown of a level, and then you want to see it recaptured just like that. False breakout, puts. False breakdown, calls. You play it level to level, and you leave runners. You leave runners to catch the home run move. Does that make sense? Triple Q here had a very beautiful intraday trading, price action, and all that happy stuff, but I like to look at the daily chart. This downtrend line has once again been broken out. The bears, they try to gap below it, recaptured it, have the next macro level fib level at 522.5, guys. That's a right around with triple Q paused today. But if it can break it out tomorrow, there's a big chance we can go fill the gap. Okay, 528 and 529.5 or higher for the gap fill. Okay, otherwise below 522.5 is overall bearish. Breaking down 521, breaking down 518, breaking down 516.5 and 515 would be our trigger to enter puts, would be our bearish sign that the price action is going to push triple Q back down lower. To put it quite simple, keep an eye on the fib level of 522.5. Above it, bulls have a shot at more upside to go fill the gap, maybe higher. And below it, bears have a shot at more downside. And here is Tesla. Looks like it's chopping for a little bit. 396.3 is the fib level that I have. And the bears tried to break it down, but the bulls just wouldn't let them have it. Maybe with FOMC tomorrow, we can get a more clear direction of what's going to happen next. But overall, above 396.3, there's a possible chance of a bounce, but bulls need to show some follow through and clear 398, 400, 402, and 403.6. They failed to do it the last couple of days, but can they do it tomorrow? And if they do, there's a good chance we're going to pop all the way up to 415 or higher. That will be a big move to the upside. Now below 396.3, once again, I need to see 395, 393, 390.5 all fail to put 388 and 386.5 all in play. Now those breakdowns of those levels work intraday, but if we're talking about a swing trading move, we need the daily chart breakdowns to give us those moves to the downside. All right, so above 396.3, bulls still have a shot at more upside or a bounce, and below it, bears can get a shot at more downside. NVDA definitely got a bounce today, a very beautiful bounce today, and they even recaptured a fib level around 127 to keep things going. Okay, today's high was around 129. If 129 can clear tomorrow, 131, 132.5 would all be in play. Above 132.5, I'd be bullish and favor a bigger bounce up to 137 in the 140 zone. If this today was a dead cat bounce, I need to see 127 and 125 fail as support. Give us the false breakout setup. You guys should know what a false breakout setup is now, okay? If not, rewatch the beginning of the video. But a breakdown of 127 and 125 would give us that false breakout and trigger puts, put in 122, 120.6, and 119 all back in play. I think we can go a lot lower than that. IWM just chopping a bit, trying to figure out what it wants to do. If it's going to be bullish, it needs to clear 228 tomorrow. That would be a breakout of this downtrend line. That would be bullish. 230.5, 233.5, 235 would all be in play if 228 clears tomorrow. If we want to get bearish, I need to see 225 fail. If 225 fails, you want to look to short with 222. Gap fill around 220-ish or lower would be incoming. Below 225 is bearish. Above 228 is bullish. Apple, beautiful bounce. Beautiful bounce. It even recaptured a fib level around 237.5. If there is bullish follow through tomorrow with FOMC behind it, 240 and 242 must clear to put 244 plus in play. If today was a dead cat bounce, then 237.5 and 236 must fail as support to put 233, 230.7, and 229 or lower back in play. We need the false breakout for a dead cat bounce setup to be presented to us. Otherwise, stay bullish if we clear the next resistant levels at 240 and 242. Amazon gave us some more upside. I mentioned if we cleared at 236 level, that is bullish. We did exactly that. The next levels to watch is 240 and 242. If those levels clear, guys, we are heading up higher, and there's a big chance we can go hit 250. Now, if you're worried about the RSI being a bit overbought, then the price action must back it up by breaking down the 236 level. If 236 fail as support combined with the RSI being as overbought as it is, I would look to short with 234, 231.7, 230, and 228 all back in play. Guys, I'm expecting a big move tomorrow, even for these tech stocks, okay? So be ready for some volatility. Meta has been destroying the bears, but if it's time for a pullback, I have support at 674.5. If it fails tomorrow, 673 and 670 are support. Those levels fail as well. 677.6, well, excuse me, 667.6 would be in play, and a drop all the way down to 660 would be possible as well, okay? If the plan is to be bullish, the next resistance at 678 and 680, if those levels clear, 683 and 684.5 would all be in play to the upside. Microsoft had a beautiful bounce as well. You guys can see I have this down yellow trend line. Above 446.5, bulls have a shot to break it out. But they'll need to clear 448 and 450 to do it, and that would put 456 or higher in play. Trust no rejection unless 446.5 and 445 fail as support to put 440, 438.8, and 433.4 all back in play. Let's take a look at the DXY. I like to look at this ticker symbol to help me gauge the SPY. And if it clears the 108 level tomorrow, 108 level tomorrow, that will be bullish for the DXY with 108.6 in play or higher. Trust no rejection from this level unless support at 107.5 fails as support. Coin is in a choppy area, okay? Now, if it's going to be bullish, I have a fib level at 282.4. That level must clear to put higher targets in play. And to end the chop bullishly, I need to see coin get above 290. If above that level, 295 and possibly all the way back up to 300 would be in play, possibly higher. Now, I do have support at 280, 278, and 276. If those levels fail, bearish, there's a big chance we drop down to 270 and 266. And below 266, the bears would be in full control for coin. Here is Doge looking bearish to me. Trust no bounce unless 34 cents recapture to put 38 and 40 cents back in play. Otherwise, all I can say is I'm bearish on Doge, 30 cents incoming. Bitcoin, it's trying to break down that 100K level. If it does, 98K and or lower would be in play, okay? Loss of 100K would be bearish for Bitcoin. Trust no bounce unless 102 and 104K can recapture. Give us that false breakdown setup and maybe Bitcoin can bounce back to the upside. All right, guys, that's all I have for you guys today. FOMC's tomorrow. I'm expecting a big move. And remember the sheep style model. Know the levels, know the setups, and just trade it unbiasedly.